open chats. I they tried the sports fair value gap,
Yeah.
try to the sports like the trend for the this thing, then some other stuff. So that's what I've been doing for like for the past, but at least
That na
that
that
myself
na
they keep
that
me
na that
busy. I'm
na
not,
that fair value gap be the cocoa. You know why? If you fit spot fair value gap, you go fit tell
yes.
direction. You fit tell say na here market dey go next. You fit tell say okay, na wetin market dey head towards be this. Na wetin e dey reject from be this. Shey you get? So that
Yeah.
drilling, fair value gap drilling, is not wasted. You needed it, but then
I know.
again today, as you don't already feel sports favor legal for charts now, immediately you see it. What we'll be talking about basically today. I know I made this video too long, make you no go all these 2 hours, 1 hour where they do. Straight to the point, no
I guess.
debating. Sure you get. So
I guess.
waiting we need to add now structure. We need to add structure, how to frame a trade. When you frame the trade, when price gets there, what you are waiting for confirmation. So you get how to enter. Now, I need you to understand that you know all these things now, but you may not even understand something as simple as setting a limit. What is a buy limit? What is a sell limit? A buy order, a sell order. If you never even understand all these things, because it just occurred to me that I might be teaching you analysis and system, but pressing that buy, pressing that trigger, where to press the buy, how to press the buy, the amount of lot size to use. If you want to lose $100, how much lot size should I be using to lose $100? To calculate your risk management, that's something we are still going to talk about. So you understand? So it occurred to me that you may not even know how to set limits yet. So
I don't know.
today, all right, today I will be talking about. Can you see my screen yet?
No, not yet. I'm
Not
just
yet.
seeing only you.
All right, all right. Let me cast it.
Yes, I can.
You can see it now.
Very well.
All right. Oh, this is Wanda. The name is Wanda. Okay.
So help me God.
Today we'll be talking about framing a trade.
Should I start just into?
Yeah, you can start jotting. Framing a trade idea, setting limits, orders, comma. Pardon me. I'm not too strong like that, so one of the reasons why
Sorry.
they always they tell you let's fix it today, then we skip
Yeah.
tomorrow. Yeah, my body just they change, but it's alright. I need to make sure we are up and doing before March ends. So let's go. Setting limit order using market order. I don't use buy stops very often, but along the line I'll talk about it. Setting stop orders. Entering a trade. Managing a trade. Exiting a trade. When you're done, you can let me know.
Okay. I'm done.
All right. All right. Good. So now, the first thing we have here is framing a trade. And to frame a trade, before you frame a trade idea, all right, there are some things that you should have already in mind. Before you frame a trade idea, you need these things. Number one, know the direction. Number two, know the target. Number three, see the liquidity. All right. Are you writing this?
Uncle, I'm
All
not
right.
himself.
You are done, right?
No, 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 not
Okay.
yet.
All right.
I'm done.
All right. Good. So now I will start by explaining framing a trading idea. You know, when we're talking about bullish market, bearish market, I talk about
Yes,
structure and how a market moves. That if the market is bullish, that means it is buying. So in essence, what is
yes,
it creating is higher high, higher lows, higher high, higher lows, higher high, higher lows, higher high, higher lows, and it's going up like that, as you can see. Right?
yes,
Good. This market is going up like this. But if it is bearish and the market is selling, what is most likely to be creating is lower high, lower
lower
lows,
and
lower high, lower lows, lower high, lower lows, lower high, lower lows. You understand me?
yes,
Let me
very well.
indicate with a red. So this is a bullish market and it trends up. If you connect all the lows together, you see it's trending up. While in a bearish
Yes,
market, if you connect all the lows between the lower highs, you see it's trending down. All right,
yes,
we can obviously see this and say, okay, this market is bullish, this market is bearish. But now, when you have identified that this market is bullish, is going up, where do you wait? How do you get involved? How do you follow the trend? That's the question, right? Now, imagine this bullish market, all right? I'm going to use my vanishing tool here. All right, imagine this bullish market right here. And half of this up, this ones that is showing over here, that's
yes,
these lines. Imagine they have not actually been formed. All right, our market is just here. Now, if we know that this market is coming to this high over here, hold on. If we know that market is coming to this high over here, our market is here right now. The question will be, how do we get into this trade so that we can profit as it's buying up and it gets here? Okay, that brings us to the use of structure. If you enter the market anyhow, you'll just be gambling. That will not be trading. But if you understand structure and how to use it to enter trades, then you have a chance of making money. Good. Let me delete this. I will explain what I mean. Look at here now in a bullish market scenario now. I want to draw something. Now, the market is trending, going up this way, right? It's trending. It's going up. Now it has to move up in a certain type of way. It moves up in a pattern. Now watch this. If it goes up a little, this is an impulsive move. When it comes down to create the lower high, that's a retracement move. It will come up again. That's an impulsive move. It may come down to create a retracement. The move that comes down is a retracement. When it goes up, that's an impulsive move. It can come down again, maybe break some lows, also break some trend line, go up, come down again, and create a new high. That's still a bullish market. Okay? But you will agree with me that at this point here, the market broke structure. All right? Why?
Yes.
Because it went below a previous lower high. But then again, what happened? It continued going up. So now, let me tell you something. The best way to follow a trending market is to look for the next best area where it is going to buy from, where it is going to bottom from. All right? I will explain what I mean. When a market goes up like this, an impulse, if you are not in this move that goes up, eh, that means you have missed that impulse. You are supposed to wait. Let the market retrace. As the market is coming down, it will do some things. It's called accumulation. It will accumulate, it will distribute, it will do everything it needs to do. Then it will buy back up. It does the same thing, it buys back up. Now, imagine before I drew these other two highs, all right? This is where we were. Abi,
Yes.
we were here. Are you with me?
Yes.
Good.
I'm very well.
Now, as we were here, as we were in this area now, let me reduce this. As we were in this area, we know that the market is going up, but we don't know how far it will go or where it will go for. But what we know for sure is that it's going to come back down to create a bottom. So, do you know where you are looking for your trade entry? The best place to look for your trade entry. Hmm? Once you identify a structure like this, your job is to wait. What did I say we would draw out that time? We would draw out our fair value area and we'll draw out our order block or our origin area. All right. It is in these two places market can come to tap in and then continue buying. Now watch. You remember this? Take a look at this over here. I'm going to draw something now. Market gets here. Now look at this. This trade has taken this fair value area, right?
Yes.
And it has used it to go up.
Yes.
Now look at this. The same structure as you can see, right? Like the one that was down there before. The same structure because we are bullish. Look at this.
Okay.
What is the difference now? Let me take this away for a little while. What is the difference between this structure over here and this structure over here? One took the fair value area to continue buying. One took the origin. One
Why
came
the
back
other
down.
didn't?
As you can see. Do you understand?
Yes. Yes. I
You are
think I
following?
understand.
Yes. One bought from tapping this fair value area line. From tapping here.
Okay.
All right.
Yes.
The other, but
Yes.
it didn't tap into here,
From the
but
origin.
it dipped. It went lower and it bought from the origin.
Yes.
All right. You can see
Yes.
that, right? Good. Now,
Very
in
well.
this fair value area, sometimes, not every time, there's something we call reaction POI. Reaction POI. A POI means point of interest.
Interest.
Yes. A POI means point of interest. Now, let me quickly write something. Price will basically, in a range, price will basically in a trading range, not just a range.
Okay.
Sorry about my nose. Uh,
No, I'm not.
think I have a flu or a
Okay.
cold or something. Yeah. In a trading range, price will basically react from three places. First one is the fair value area. Second one is reaction area. The origin area. All right. Now, I am going to spot out these three areas on the main chart for you.
Okay.
Are called POI, points of interest. That means that is where the market is interesting, or that is where the market is interested in going into to continue its direction. You understand me? Good. So we are done. Are you? We are done. Let me know.
I'm done already. I'm following
Okay.
you well.
Okay.
Done.
Good. So in a trading range, price will basically react from three places: fair value area, reaction area, the origin area. These three areas are called POI, points of interest. Now, bullish example. When you see a range, a bullish range, market going up, and then you are lucky to find a setup that looks like this. This is these are the areas price will come back to. Will likely want to come back to. The price might keep on going buying without coming back there, but these are the areas it will most likely want to trade back into. Now, we already know that this is origin area, reaction area, fair value area. You see this, right?
Yes.
Sorry. Okay. So these are the three areas price can come and react from. And this is what price can likely do. Price can make a retracement, tap into this fair value area, continue. One. Price can make a retracement, tap in this reaction area, continue to. Price can do a lot of dances, come into this origin area and continue 3 before it decides to either now continue up or something. All right. Now,
Yes.
when I say reaction area, I will explain the theories behind this area, and then we'll go to the charts to look for it.
So,
This range, what you are looking for it on the 4-hour time frame. Okay, this range, your trading range should be looked for in the 4-hour time frame to spot trading range. This trading range over here is to be spotted on the 4-hour time frame. Now, are you with me or are you writing something down?
yes. Yes, I'm not using the 4 hour time frame to spot
Okay,
trading. I'm done already.
all right. So now, how does all these things form? We already know that this fair value area, it forms after price breaks above a previous high. This previous high, okay? You know
Yes.
that this place here was the last fair value area over here, fair value area. Once price broke into it, it came back down into it. You can see the top fair value area. It went a little bit lower and then it bought up, as you can see.
Yes.
Then a fair value area is created after price breaks its preceding high to continue in the direction. That's what happened here. This reaction area, how is it created? Now, I will explain by doing this. A reaction area, now just listen first. A reaction area
Okay.
is created when price, before breaking a high to create a fair value area, it either does a reaction there. It is either it consolidates or it stops before continuing. Now look at this. When price is moving up like this, it will break clean. That's a clean break of structure. It can come down again, break clean. It can come down again. On its way to breaking, it can do something like this. All right?
Yeah.
Are you with me? Good.
I'm with you.
Now, let us mark out all these ranges and see what they have and what they don't have in common. This
Okay.
has a fair value area. All ranges have a fair value area. This has a fair value area. And now this is the current fair value area. The price just broke. Now, this has an origin. Then this becomes an origin. And this cluster over here, that is a reaction area. Now, I need you to understand this. This has been tapped. This was missed, and this is waiting to be tapped. Now, look at this. When price was here, it created this high, this low, obviously, like this. High, low, high, low, high, low, high. All right, that's what price
Yes.
did. That's what price did, in essence. But it didn't just do that. All right, there are some things you to create inside its structure. This is the origin. Remember, I wrote it in the last. I wrote it over here. The move that starts the impulse that goes to break that high is the origin area. Now watch this.
Yes.
While the reaction that it will do in the middle before breaking the high over here is the reaction area. Okay, I will show us in the chart right now. Look at this range. This first one, range one. This one over here.
Okay.
This is the first range.
Yes.
First range, second range, third range. Abi?
Yes.
Good. This first range broke this high. By moving this high, it broke this fair value area, created this first range. Then look at its retracement. This one down here, the move
Yes.
downwards
Yes.
is the retracement. This is a retracement. This is a
Yes.
retracement. This is a retracement. For it to come back down now before it to continue buying, it will retrace again. It can either retrace here or retrace to the low, all right, or just retrace to this fair value area and then continue buying. You understand me? These are the three
Yes.
places.
Very well.
So when price retrace here, what are you looking to see? That is what is going to be our entry. That one is going to be on the 1 hour time frame. Okay, so
Okay. So sorry,
that
I have a
retracement
question.
has not happened. So now let us hold on. So
I am.
I can hear you.
So I said I have a question like this.
Okay, your voice is a little bit reclined. Try to speak up.
Yeah. I hear you now.
I can hear you. Go on.
So you said something here. You said we are going to look for our entry in the 1 hour time
Time
frame,
frame.
right?
Yes.
So why must it be 1 hour? Why is it not say the same 4 hour that analyzing this person? I want to know all of like
Okay. Because if you can drop down to the 1 hour, you can get in
okay.
quickly or more quicker. If you wait for the 4 hours, all
Yeah.
right, the confirmation is going to be stronger, of course, but you are more likely to miss out on the beginning moves. All right, I don't want to have you waiting like a swing trader. I am bringing you into this market like a day trader, where if you catch trade, you can hold it for 2 days, 3 days, and you are out. Not the one that I do, where I might hold a trade for 1 week. Like now, I entered a trade on Friday yesterday, and this is a weekend. Tomorrow is Monday. That trade is still in profit. It's going to run throughout the week if markets are favorable. So the reason why I am not pitching a forward entry for you is because of this. I am talking about structure now. I would like to show you what happens when price taps into all this POI and how it happens on a smaller time frame. I can easily tell you what to wait for on the 4 hour time frame, okay? If price, I will also show you that. No hurries. But if you are entering with structure, you want to drop down time frame because by the time the 4 hour time frame is creating another structure, you have already missed the entry, you have missed the trade. Price has already started buying. It will leave you behind. You understand? Except you are advanced, experienced, and you know how to catch it from the 4 hour time frame. Okay, so that is why. Did you get that?
Understood.
Okay. When you are rewatching this video, you can now see what I mean and have a vast knowledge. Now, let us quickly go into the chart. to see this play in real life. What we are talking about now is the first one, framing a trade idea. Okay, we have not come into setting limit orders and all that. So now, this market, as we can see, is bearish. All right, how did we anticipate that it is bearish? Like I said, does the market, this is the daily time frame, does it have two short-term lows or short-term highs? If you check, uh GBPUSD currently have, look at a fair value gap here. You can see it, right?
Yes. That's it.
You can see a fair value gap inside here. One, and you can
Yes.
see a fair value gap going down also, bearish into the same direction. Two, there is one that was
Yes.
created here bullish, but it didn't hold. So immediately price created another fair value gap inside here. Three. So obviously, we can see that price has created about three short-term lows.
Yeah. Yes.
So this means this place has automatically become our what? Our intermediate term high.
Intermediate.
Our intermediate term high. So when price start to buy again, when this market reverse bullish and start buying, we can understand that what price is targeting is this intermediate term high. You understand me? Yes, because price will move from intermediate term high all the way to intermediate term low. This is our last
Yes.
intermediate term low over here. Remember, I said it that the low that starts a very long movement of buys or sell is an intermediate term high. This was the beginning of all this move up here.
Yes.
As you can see, look at price was coming like this, like this, like this, and then a big move. As you can see, what the price do is started selling into that intermediate term low. So that it has been selling for quite a while, and that made me choose that this back market was a bearish market, as you can see. Okay, so now we have determined that this market is bearish. We want to sell. All right, we want to sell. What we will be looking for, we are looking for what? Bearish structure that goes down like this. You can see, right?
Very well.
Good. If we go to the 4-hour time frame where we are looking for our structure,
Okay.
can you already see it? If like, can you already see the structure
Yes.
from moving down like this? Your eyes can already see it, right?
Yes.
Now let's trace it out. Just watch as I'm tracing it to from the bullishness. Price was going up like this, up, down, up, down, up, down, up, down, up, down. Look at when it changed.
Yes.
You see when it changed and then down, up, down, up, down, up, down, up, down. You can see how the market switched from bullish to bearish.
Yes.
All right. So that gives me the realization that there are only two reversal pattern I want to recognize. One that if the market is switching from bullish to bearish, one that goes like this, it sweeps the high and then sweeps the low to continue going down. Okay,
Yes.
this is a bearish reversal. That is one. And then one that does like this: up, down, up, down, up, down. Now I'm going to explain the difference between these two. If you look at this one, has a sweep and a direct break of structure. This one doesn't have a sweep. If you look at this pattern right here, price sweeps this high, then it breaks lower. I'm not gonna touch more on this. I'm teaching you only trend following. So I'm not going to touch more on this, but let me just quickly touch it. And then it breaks lower. Why on this one price sweeps this high, it fails to break lower once. It first of all creates a low and then it breaks lower. Can you see the difference? After price creates a
Yes.
high, it immediately breaks a low. Why this one?
Yes.
After it creates this high, it refused to break the low immediately. What did it do? It created a reaction that goes up small and then it breaks the low. Okay, good. And
Yes.
this pattern right here, this one is what is here. Price creates a high, could not break it in one go, created a low. The low did not sweep this high and it broke the low. So now, look at this. As we have been able to ascertain that GBP/USD is a bearish market, like I said on this daily time frame, because we were able to spot the multiple um, short-term highs, right? Let me just draw out.
Yes.
Let me draw out the Fibonacci, the gap, the fair value gaps quickly. There's a fair value gap here as well, but this liquidity provider is not showing it. It's not correctly showing it. It's not showing on this chart, but there's a fair value gap here, something like this. Let me show it to you here. You can see it here.
Yeah.
Yeah, you can see the fair value gap here. But
Yes.
if I go to this other guy that I'm analyzing from, it is not there. So let me just put that. Sometimes it's like that sometimes in the market. Let me just put this circle here. This is the daily time frame, don't forget. All right, daily time frame. So when I go to my 4-hour time frame, I'm trying to spot what are we looking at for now. We are looking for structure. When this change happened over here, the structure change, what you immediately start looking for is this. You draw your structure, you start looking for your fair value area. Remember, fair value area, your origin, fair value area and origin first of all. Then you now check if the move down has a rejection or a reaction area. All right. So let us find it now on this chart, and let me show us how we spotted our trade. Good. So look at this. Market goes down, comes up, goes down, comes up, goes down, comes up, goes down. Let me stop here. This is where I caught the first trade. Remember that this is a daily fair value gap here, and I said if you don't have a daily fair value gap, you don't have a trade. So as we see, say markets get fair value gap for daily time frame here, which will go find for 4-hour time frame structure. And currently, this is the structure that we have, the one that moves like this, up, down, bearish structure. So now, seeing this structure, where was the break of the last low? This move that slowed down like this, where did it break? This is where it broke, right?
Yes.
Good. This is where it broke. We'll draw out, and that is what our what? What is that place?
Reaction area.
This is not the reaction
Right.
area. This line that breaks is the fair value area.
You mean, you mean this line that breaks?
Yes, this is the fair value area. All right. The move that breaks that structure, that breaks down, is the
Okay.
fair value area. You have seen it
Yeah.
now, Abi. You have seen it. Market went up
Yes.
like this, then it broke down to create a newer low. This low that
Yes.
was broken down is the fair value area. Price can return there. You see how price returned to it and sold.
Yes.
This is current price action. No, this is last week. This is what happened last week. I'm positioned somewhere around here. You see this fair value gap.
Yes.
this 4 hour fair value gap, right? This one over here. That is where my entry
Yes.
is right now.
Okay.
I'm on a trade on GBPUSD, something like this. But I entered, like I said, lower time frame because I didn't want to use 4 hours. Market was already closing, and I cannot use something that big. So I'm expecting it to continue going down. Let me delete this. So now we have spot our fair value area on this market. Fair value area. What else did I say we'll go and look for? Origin, Abi.
Yes.
Where with this move down, where is the beginning of the move? This high. You can see this is the starting of the move before it fell
Yes.
down like this. Now in this high, there's something we call other blocks, and that is what I sent to you. That's the video I sent to you yesterday. All right. If you look very well from that video, the video said the last what? The last opposing candle before